Hey, welcome everybody. We wanted to welcome you back to another Mortgage Minute. I'm Matt Thomas with Compass in the Altitude Group. We're here with Brian Dewald of Fairway Independent Mortgage and the Dewald and Associates team. Brian, will you let's just jump right into it. Tell us what's going on in the world of mortgage market right now.
So a couple things I thought we could touch on today. The first one is I'll give you just a quick snapshot over the last week. Mortgage-backed security prices have remained relatively level. We've seen a little bit of up and down movement, but nothing substantial, which is good news. We've really needed the market to sort of level off just from a price standpoint, which is helping everything across the board. So super good news there. We haven't had any tremendous hikes like we've seen over the last few weeks. The second thing I thought I'd touch on real quick is just that, when it comes to the Federal Reserve and what happens with mortgage rates when the Federal Reserve starts talking. Super common misconception that when we hear the Fed is going to raise interest rates, that it has a direct impact on mortgage rates. And in fact, it does not. Okay. A lot of times we'll see mortgage rates react to the chatter, right? When the Fed starts talking about raising rates, we'll sort of take that into account in terms of what the market's going to do, but there's not a hard, like if the Federal Reserve meets and they decide to raise rates a quarter or 0.5%, it's not a direct impact on mortgage rates. So if we're sitting at, X% today and the Fed raises rates by 0.5 point, we don't see that mortgage rate raised by 0.5% right across the board. So most times we already know that that's coming because they talk about it preemptively. So anyway, just thought I'd touch on that. It does have a direct impact on, if someone's buying a car potentially, or, credit card balances or home equity lines of credit. Those things are directly tied to the Federal Reserve. But fixed mortgage rates don't have just a real direct impact like that, like most people think. So.
Okay, so if people are listening to the news and they hear that that the Fed has taken some action, they don't necessarily need to assume that there's a direct correlation to what's going on in mortgages, right?
Correct. Okay. Yeah, there's about 1 million different things that affect what we see as far as mortgage rates go, but sure. The Fed's comments have stuff to do with that, but it's not a direct impact.
Okay, well, it makes sense, and again, it's why we're meeting here every week. It's to discuss what happens. I mean, the mortgages. Mortgage interest rates, they move every single day, literally. Now the news can change certainly on a daily basis, but certainly on a weekly basis. So give us since we met last week, what's happened to interest rates?
It's a great question. They've sort of flatlined a little bit, which hopefully that correction starts to help us a little bit. When rates start taking off all over the place, this doesn't really matter to consumers a whole lot from a back end perspective, but it puts a lot of pressure and stress on the mortgage industry. When loans get packaged and bought and sold and everything else, there's a lot of serious challenges, and I don't really have a whole lot to do with any of that side of it, but I know that it makes some challenges for our industry. So if we can kind of flatten off a little bit, like I said, a huge increase or a huge decrease makes the industry freak out quite a bit. So if we can sort of baseline a little bit, it'll be good.
Well, and I know in talking to you or personally, you mentioned that you were thinking that things might cool down after a couple of weeks. We saw those big jumps in the last, about 2 or 3 weeks ago. And, it was really shocking to the industry. Of course, I think it caused the buying pools to sort of cool off, and people have kind of pulled back a little bit, kind of waiting to see what happens. And waiting can be a good thing, but a lot of times, right now, people are urging home buyers to just to check in with you and right. Just to say, hey, what's going on right now? And maybe waiting is not necessarily the best thing. Now, from day to day, you can be rewarded with, maybe a change in the interest rate. But, in general, if things are cooling off right now or kind of leveling off, as you mentioned, it might be a great time to chat with you and before they start to potentially tick back up, right?
Yeah, hopefully. I mean, it's hard to predict what is going to happen on a daily basis for sure. Yeah. You mentioned it changes every day, and throughout the day, it's changing as well, right? The mortgage-backed securities are being traded almost like stocks on Wall Street. So, we see movement throughout the day. Fingers crossed, we don't see any tremendous movement throughout the day, which we've seen a lot this year. Like I said, it's at least for the moment, it's sort of leveled off a little bit, which is good.
Okay, well, good. Well, any advice at the moment, or kind of the last little tidbit of information you want to leave with us?
I think my only thoughts are that it seems like it's getting a little bit easier for buyers than it was a few weeks ago.
Yeah.
That's my thought. I'm super excited about that. We're seeing more and more folks go under contract without having to do the super insane things that we were seeing in the, earlier in the year. So,
Yeah.
Hopefully that's a sign for things to come.
Well, I think you're absolutely right there. I mean, the adjustments that buyers and sellers make, right now, sellers, certainly there was all this talk about, well, hey, my neighbor got this and they got 100,000 over and all these things. And it's hard not to want that too, right? As a home seller. Now home sellers are maybe getting, still potentially getting offers and really solid offers, but maybe they're not quite as strong. Or maybe they have to go back to fixing things where before would have blown things off. So for sellers, the balance is tipped just a little bit. I think that's good for the market overall. But for home buyers, you're right. I mean, if you're a home buyer that's kind of been sick of the market, how it's been, and been, you felt some attrition from that, then, that makes sense maybe to reevaluate and see what's out there. The homes are lasting a little bit longer. Some of them are price reduced. And, if nothing else, you're going to get, maybe not have to go quite as much over the asking price and potentially, even get a couple of things that you're actually looking for, like repairs. Back in the old days, a couple of years ago, when you could actually ask for things in addition to the house. So anyway, great. Well, it sounds like there's opportunity. As always, I urge you to check in with Brian. Again, we bring these updates to you weekly, but as Brian said, the industry changes, like literally the rates can change on a daily basis, an hourly basis, certainly on a weekly basis. So check in, and word of the day right now is to find opportunity, Brian, right?
That's it. Love it.
Sounds great.